3.1. 3.1 is completing payroll records for employee earnings and deductions. So we have 3 learning objectives. You need to be able to explain how employees are paid. You need to be able to calculate employee earnings, and you need to be able to prepare prepare payroll reports. So first, they're just talking about the difference between wages and salary. Wages are paying for every hour that is worked by the employee. Salary is going to be a fixed annual sum of money that's divided among equal pay periods. So it kind of depends on the salary. Sometimes they pay that like twice a month, or they might pay it monthly. So it depends on the business. Pay period is the number of days or weeks of work covered by an employee's paycheck. Payroll is the total amount earned by all employees for a pay period, and then payroll taxes are going to be those taxes based on the payroll of a business. Um, Payroll deduction. So they talk about a withholding allowance. This is a deduction from total earnings for each person that's legally supported by a taxpayer, including the employee. So if, let's say that we have a child, we might have 2 withholding allowances. So one would be the employee, and then 2 would be their child. A tax base, the maximum amount of earnings on which a tax is calculated, that is called our tax base. Here they give us a nice pie chart that shows us the percentages of payroll deductions. So notice like federal income tax is 6.9%, 5.1% for state, Social Security 6.2, Medicare 1.5, health insurance 3.5, retirement plan 2.3, and then 74.5% is going to be net pay. So on this slide, what they're doing is calculating the employee earnings. So we can see this document here, it's showing the hourly employee time summary. So Juanita, we can see that the week of July 5th, she worked 40 hours, 1 hour of 1 hour of overtime for a total of 41 hours. And then the week of the 12th, July 12th, again, 40 hours of regular and 3 hours of overtime for a total of 43 hours. So here we can see the total amount. So 80 hours of regular time, 4 hours of overtime for a total of 84 hours. We can also see up here is our pay period. Here we can see the date that this was prepared on. In this example, it says employees are paid 1.5 times the regular rate for overtime hours. Now, that is the standard, 1.5 times the regular rate for overtime. However, different businesses might have incentives for overtime. They might pay double rate for overtime, so it just depends. In this example, 1.5. So what we need to do is we need to figure out, because it's paid differently, we need to figure out the regular earnings and the overtime earnings. So the regular hours, 80 hours, and the regular rate is $18. So 80 times 18 is going to be regular earnings of $1,440. Then we need to look at the overtime. There's 4 hours of overtime total. Regular rate is $18, and we need to figure out the overtime hours, or overtime rate, sorry. So if we took the regular rate of $18 times 1.5, because it's time and a half, that would be they get paid $27 for overtime. So $27 times those 4 hours is going to be $108 for overtime. We add the regular earnings plus the overtime earnings to get then the total earnings, $1,548. Next one is commission. So it says to encourage increased sales, the managers are sometimes paid a commission on their net sales. Below is going to be a typical commissions record. So commissions might be like for a car salesman, sorry. They might get an incentive. They might earn so much commission for every car that they sell. And that would be an example of commission. So in this example, we can see Guerin, I believe that's how you pronounce it. He is making a salary of $1,000 biweekly. We can tell that his position is a department manager, and he's in grills. So here we can get the sales on accounts for the total sales of the month. So here we see the difference between grills and we see furniture. Here we see any discounts, returns, and allowances. So this would be the reduction in sales. And so here they're giving us the net sales. So $11,615.65 in grills, $8,227.81 in furniture. Now, they're going to get a commission rate. So in this example, he gets a commission rate of 3% for grills and 5% for furniture. So they're going to take the net sales times that rate of commission to figure out what the commission is. So he earned $348.47 commission for grills, $411.39 commission for furniture, and then the total commission is adding those two together. So commission can be stated different. In this example, it's a percentage of the sales. Sometimes it might be, excuse me, like I said, like a car salesman might get a specific amount for each car that they sell. It depends on how the commission is written. So now we're going to be preparing a payroll register. So when it says an accounting form that summarizes the earnings, the deductions, and the net pay of all employees for one pay period is called our payroll register. So number 1 is corresponding over here with number 1. This is where we're going to enter the last day of the pay period. So the last day is July 12th. Oh, there's no number 2 on here, is there? Interesting. Yep, they just skip over number 2. Okay, number 3 here, which would actually be number 2, we're going to enter the employee name and the information from the personal records. So here we see the employee numbers, we see the employee names, we also see this should be their marital status on this one, and then we see their allowances. So M stands for married, S stands for single. Number 4 is going to list then their earnings. So we can see their regular earnings, we can see any overtime earnings, and then any commission that they made. Those 3 added together will be their total earnings. And then it jumps up all the way to number 9. At the end of the payroll period, we're going to calculate all of those columns. So here we're adding up their totals. Well, this is why, because on the next page, they're putting, I don't know why they did it this way. Okay, well, they're showing us 2 sides of our payroll register instead of all at once. So here on this number 2, we can see the record date of the payment. So this is when we're actually making that payment. We're going to extend our total earnings to the appropriate department column. So here are department columns for our earnings. Then in this section, we're going to enter in all of our deductions. So federal income tax, state income tax, Social Security, Medicare, health insurance, and the retirement plan. And then this, number 7, is going to be our total deductions. So all of those deductions added together will give us our total. Number 8, we're going to take our earnings minus our deductions to go ahead and get our net pay. Is that it? Yep. And then again, they're totaling up all of these at the bottom. Using the federal income tax withholding table. So the federal income taxes withheld from the earnings of single individuals are greater than those that are going to be withheld from married individuals. Federal income tax withholding can be determined from tables that are similar to the following. So there's actually tables that are used to figure out what those deductions are going to be. Now, they just give us an example of a married one, but there is a different one for single. What we would do then is we would figure out here, the example, agrarian hen is married, claims 2 withholding allowances. His earnings are $1,759.86. We would find where this number falls. So if we look over here in our table, it's going to fall between 1,740 and 1,760. Okay, so we know that we're on this line here. Then we know that they're married, so we're already on the married table, obviously. And he is claiming 2, so we're going to go over to the 2 column. And here, that is $135. So when we connect the 2 and the amount of the wages together, we see 135. We also need to prepare an employee earnings record. So before we did that record was for all of our employees, then we also record one for each individual employee. So a business form used to record details of an employee's earnings and deductions is called the employee earnings record. An employee's total earnings and deductions for each pay period are going to be summarized on one line of the employee earnings record. A lot of this information comes off of what we just got done creating before. Okay, so we see this says quarter ended. We have the information about our employee. And then we see here is the pay period that we had entered. Okay, so total earnings. We have all of the deductions listed, total deductions. Here we figured out the net pay. And then we figure out the accumulated earnings. Accumulated earnings are going to be figured out by taking the previous accumulated earnings plus the total earnings of that pay period. A lot of times students get this mixed up and they want to add the before accumulated earnings plus the net pay. That is not right. Make sure that you're paying attention to that keyword earnings. So previous accumulated earnings plus this pay period's total earnings will equal your new accumulated earnings. Out of your understanding, number 1, what 3 federal taxes are withheld from an employee's pay? We have federal income tax, Social Security tax, and Medicare tax. Those are going to be the 3 federal taxes. Number 2, how is the amount of federal income tax withholding determined? Though that number is going to come from the withholding tax tables that is going to be given by the IRS. Number 3, what is the formula for calculating net pay on the payroll register? To figure out net pay, we would take the total earnings, so what they earned, minus the deductions, the total deductions, and that will give us the net pay, what we actually write the check for. And last question, number 4, what amount is added to the accumulated earnings to get the new accumulated earnings to date? That is the total earnings for the pay period. Remember, we don't add net pay, we add the total earnings. That was the end of 3.1 lecture. You can now move on to the 3.1 work together.